All right, let's turn back the clock to 2020. You had the chance to buy Palantir Technologies for about $10 a share. But a lot of people took a look, saw this weird, secretive company cozying up to the government, and they hesitated. They waited. And then they watched it shoot up to $20, $30, even $40 a share. Fortunes were made. And for a ton of investors, the biggest regret was simply missing out. That feeling, the fear of missing out, is a huge driver on Wall Street, and Palantir was the one that got away. That door feels shut now, doesn't it? Palantir is a titan, a giant with a market cap that's now flirting with the hundreds of billions. The kind of explosive, life-altering gains feel like they're in the rearview mirror. Let's be honest, the world isn't getting any safer. Geopolitical tensions are simmering, and the way conflicts are fought is changing faster than ever before. The next war won't be won with just tanks and soldiers. It'll be won with data, with predictive analytics, and with artificial intelligence. This is the new arms race. And right in the middle of it are the companies building the digital weapons of tomorrow. Palantir proved this business model could work. They showed everyone that you could win multi-billion-dollar contracts by giving elite AI software to the Department of Defense, the CIA, and all the other three-letter agencies. They basically created a whole new category. But with that kind of success comes a massive price tag. For Palantir, to double from here would mean adding hundreds of billions of dollars in market value. That's a huge ship to turn. And that's exactly where the opportunity is. In any tech boom, whether it was the internet or electric cars, the biggest windfalls often come from the scrappy contender, not the established leader. It's the company that learns from the leader's mistakes, innovates on the playbook, and does it all from a much, much smaller starting point. Investors who are still hanging on Palantir's every word might be missing the earthquake happening right under their feet. There's a smaller player locking down critical contracts, pouring money into its research, and targeting the most crucial area of modern defense, unmanned systems. And its stock is showing some very unusual trading activity, a classic signal that institutions are quietly building a position before the news goes mainstream. Missing Palantir stung. Missing the one that comes next, that could be unforgivable. So what is this company? The AI defense stock that's quietly being snapped up by Wall Street is BigBear.ai, and the ticker is BBAI. Now this isn't just some random shot in the dark. It's a conclusion based on a pattern of evidence that looks a lot like the early days of Palantir. BigBear.ai is a pure-play AI company that provides decision intelligence and predictive analytics almost exclusively to the US government and its allies. With a market cap that's a tiny fraction of Palantir's, it offers a completely different kind of bet. The risk is real, you can't ignore that, but the potential upside is enormous. If BigBear.ai can grab even a small slice of the AI defense market, a market that Palantir basically invented, the potential for its value to multiply isn't just a fantasy. It's the whole reason smart investors are getting in now. This is the solution for anyone who saw Palantir's rise and is looking for that kind of explosive potential again. It's a high-risk, high-reward shot, but the data suggests something big is brewing. In simple terms, BigBear.ai builds the brains for the future of war. The company is a specialist in predictive analytics and machine learning for unmanned systems, drones, autonomous vehicles, and missiles. They're developing the AI that lets these complex machines understand what's happening around them and work together on the battlefield. For example, BigBear.ai is working with the US Army on something called Project Linchpin, which is all about integrating AI into warfighting to coordinate drone operations. They're also building AI-powered software for the US Navy, and even developing facial recognition systems for airports, which shows just how deeply embedded they are in national security. One of their key wins, a $13.2 million sole source contract awarded in March 2025, is to modernize a critical force management platform for the Department of Defense. This isn't just some small IT job. This is about giving the top military brass the tools they need to make data-driven decisions on how to deploy troops and equipment anywhere in the world. Picture a modern battlefield. It's an overwhelming flood of information from satellites, sensors, drones, and intel on the ground. BigBear.ai's job is to cut through that chaos and provide clarity, to give commanders a predictive edge. They're not just focused on analyzing what happened. They're focused on decision intelligence, telling you what's likely to happen next and what you should do about it. This is exactly the kind of tech the Pentagon is pouring billions into, and BigBear.ai is carving out a name for itself as a specialist. This is where the story gets really interesting. Let's look at the numbers that are making heads turn on Wall Street. First, the order backlog. For a government contractor, this is one of the most important things to watch because it represents future revenue that's already under contract. By the end of March 2025, BigBear.ai's backlog had shot up to $385 million. To put that in perspective, it was $168 million at the end of 2023. This isn't just slow and steady growth. This is a dramatic, almost vertical leap in demand for what they do, and it points to a huge pipeline of work. Second, follow the money inside the company. BigBear.ai has been aggressively upping its R&D budget. You don't make a move like that unless you're building new technology, because you expect to land even bigger, more complex contracts down the road. It's a huge vote of confidence from the management team. Third, the financials, while complicated, show some good signs. The company isn't profitable yet, and revenue growth has been a little slow at around 2 to 5% in recent quarters. But you have to look closer. They've been cleaning up their balance sheet, cutting long-term debt by $58 million in the first quarter of 2025 alone. This move helps stabilize the company and gives them the cash they need to deliver on that growing backlog. Finally, Wall Street has taken notice. The stock has had days with double or even triple its average trading volume. We've seen a spike in ownership from major institutions like BlackRock and Vanguard. That kind of big money moving in often happens right before a stock takes off. While analysts are mixed right now with a moderate buy consensus, the numbers under the surface suggest a company that's at a major turning point. The best way to really grasp the opportunity with BigBear.ai is to put it right next to the giant it's trying to follow. Palantir. Let's start with the most obvious difference: size. As of mid-2025, Palantir's market cap is way up in the stratosphere, floating around $340 billion. BigBear.ai is just a tiny fraction of that. This is the core of the bet. It's a lot easier for a smaller company to double or triple in value than it is for a $340 billion behemoth. The law of large numbers is working against Palantir here. Next, let's talk about focus. Palantir has been wildly successful, but now its growth is spread thin across huge government and commercial divisions. BigBear.ai, on the other hand, is a specialist. It is laser-focused on the defense and national security world, especially in the red-hot area of unmanned systems and battlefield AI. That specialized focus could let it completely dominate a very profitable niche. Then you have the valuation. Palantir trades at a sky-high multiple because everyone knows it's the leader. BigBear.ai trades at a much lower multiple, suggesting its price hasn't caught up to its potential yet. Palantir is priced for perfection. BigBear.ai is priced for growth. This isn't to say BigBear.ai is the next Palantir. Palantir has a decade-long head start in a fortress of massive contracts. But BigBear.ai doesn't need to become Palantir to be a huge win for investors. If it can deliver on its $385 million backlog and keep winning these specialized contracts, capturing just a tiny piece of Palantir's valuation would mean a massive return for shareholders. Now, we have to be clear-eyed about this. No investment is a sure thing, and this is definitely a high-risk speculative idea. Let's start with the good stuff, the catalysts. The single biggest thing that could send this stock flying is the announcement of a major flagship government contract. I'm talking about a multi-year 9-figure deal that would instantly prove its technology works at scale. That's what sent Palantir to the moon, and it's what investors are watching for here. Continued growth in their backlog is another huge one. Every quarter they can show that number is growing. It makes the investment a little less risky and proves the momentum is real. But the risks are just as real. First, the company is not profitable yet. Its recent revenue growth has been slow, and it still has to prove it can turn that impressive backlog into actual steady cash flow. There's execution risk. Second, its success is tied to government budgets, which can be unpredictable. A shift in military spending could hurt its growth. Finally, the company has had some challenges. It disclosed a material weakness in its internal financial reporting in March, and has had leadership changes with a new CEO and an interim CFO taking over in 2025. While the new CEO, Kevin McAleenan, has serious government experience as the former acting Secretary of Homeland Security, these changes do add a layer of uncertainty. This is a complicated story with huge potential on one side and very real risks on the other. If you're getting value from this kind of deep dive analysis and you want to stay ahead of the curve on the next big market movers, take a second to hit that subscribe button and ring the notification bell. We break down the stocks Wall Street is eyeing before they hit the mainstream. So, is BigBear.ai really the next Palantir? The answer isn't a simple yes or no. It has a lot of the same signs that made Palantir a star: a rapidly growing order backlog, big spending on research and development, and a sharp focus on the future of warfare. It's a pure bet on the AI defense boom, but it's also a much earlier and therefore riskier investment. It hasn't landed that one massive, transformative contract that would put it in the big leagues. Its financials show a company that's in a turnaround phase, building up its cash, managing debt, but still posting losses. Here's the bottom line. For investors who kick themselves for missing Palantir's incredible rise and are willing to take on a high amount of risk for a potentially massive reward, BigBear.ai is one of the most fascinating high-stakes bets in the market today. The gap between its small size and the massive market it's going after is just too big to ignore. This isn't a bet the farm stock, it's a calculated, speculative move on the future of defense. It's a bet that this small, agile company can, in fact, follow in the footsteps of a giant, and that Wall Street's quiet buying is the tremor before the earthquake. The door on Palantir might be closed, but a new one with the ticker BBAI might have just swung open. What's your take? Is BigBear.ai just a lot of hype? Or is this the real deal? Have you been watching this stock? Drop your thoughts in the comments below. I read every single one.